Welcome back, traders. This is Spencer with Numbers of Finance. We are back with another market analysis video. Today is Tuesday, May 7th, 2019, and starting off, as always, we're going to be taking a look at SPY on the daily time frame. Now, starting off this video, I'm just going to say it is an incredibly bearish day. Today's price action was as bearish as it can possibly be. Why? Well, the important thing about today's price, don't get me wrong, the 2 percentage points in the red and QQQ is also very significantly in the red. That's very important for the bearish case, but the more important thing is the fact that we took out yesterday's lows. Yesterday's lows were an important price point, and the reason for that is this. Yesterday we gapped down, which was basically our all-time low. We can see on the last candle there was a little bit of a wick just below the opening price, but basically the opening price was the low of the day. And the reason for that was Sunday night, Trump comes out on Twitter, announces the certain trade war news. The market gets all up in their arms, and we gap down significantly. But what happens is when you gap down significantly over the weekend, there's not a whole lot of volume, so you can't exactly say if that movement is valid. You have to have it tested throughout the course of an actual trading day where there's high volume, where institutions are buying and selling, and let it play out like that. And what happened Monday was we saw that the institutions were buying, the buyers were coming out, and it looked as if that the gap down that we had overnight was somewhat of a, I don't want to call it incorrect, but it seemed like it was somewhat of a short-lived pullback. But today we gapped down again after we had time for the news to settle, and we continued to sell off, which is very significant. Taking a look at the MACD and the RSI, we can see now that momentum is sharply falling off after today's push down. The day's not over yet, but I would be very surprised to see a strong rally up. Certainly nothing that'll get us close to the opening price of today. But again, the momentum is starting sharply down now on the daily time frame, and this could be the possibility of a confirmation of this bearish divergence that we've been pointing out for a while now. It still remains to be seen. There still is certainly work to be done for the bears, but it certainly is a very strong possibility. Now that this pullback is starting to have some teeth, it's starting to look like it might be a fairly real deal. Don't get me wrong, this still could be just another one of these small limps that we had down, whereas the bulls just bought right into it. But it remains to be seen. Right now the bears are absolutely 100% in control of this market, and until proven otherwise, I'm going to be on the bearish side. But I figured I would just lay out some near-term price targets, maybe not near-term, but for possible pullback targets. Now, I will say this: there are a group of people that think that this is a third wave down in a bear market, in which case these pullback targets are meaningless and you expect it to keep going lower, and that's perfectly fine. But for those of you that think that we're going to be heading to new all-time highs from here, these are the locations where you might look for a reversal, you might look to step in and buy. But I'll just go through them real quick. 286.16, 281.31, 272.62, and 262.99 are the four biggest resistance support levels that I can come up with. There certainly are more, but these are the most significant ones. And also they're not to the penny. You have to give them a certain amount of leeway both to one side or the other. But those are the important points to keep an eye on for a possible reversal, but that's that. I'm trying to keep this video pretty short just to get it out there as quickly as we can, so I'll probably stop after TLT, but I figured it was worth mentioning. But TLT, so 20-year Treasury bonds, they're not directly correlated with the markets, but a lot of times what happens is when institutional investors get worried or nervous in the markets, they start to have fear about what's going to be happening. This will spike because investors are taking their money out of the broad stock markets and they're putting it into bonds. Now again, it's not directly correlated, so it's kind of hard to tell. You kind of have to make your own judgment on each individual case. But what we're seeing today is a very strong pop-up in the TLT Treasury bonds. 0.81% doesn't sound like that much compared to the markets, what we've been having recently, but it is a very big, significant number for Treasury bonds. And so it's something to keep an eye on. We've had this uptrend line for a while now, and we actually do have a long position currently on it right now. But this impulsive buying that we've seen, especially today, is a very strong checkmark for the bears. But I'll just leave it at that. Make what you want of our analysis. If you like this video, please leave us a like, comment, and subscribe. It's greatly appreciated. Until next time, make sure you keep your numbers up.